Welcome back. The next corporate conversation is with TeamLease Services. The stock right now is up by close to about 4% and perhaps reacting to the improving margin trend. In Q1 of FY25, margins were 0.9%. Q2, they expanded to 1.2%, stayed the same in Q3, and in Q4, they further expanded to 1.7%. And for the full year, revenue growth has stayed at 20%. Ramani Dathi, CFO of the company, is now with us on the show. Ramani, hi, morning. This is Reema Tendulkar here. Before we get to, the outlook, just explain the headcount decline. On a sequential basis, your overall headcount is down by 7,500. Is it purely on account of attrition in BFSI? Or are there any other pockets of weakness in hiring? And what is the outlook on headcount addition going forward?
Good morning, Reema. So specific to this quarter, as we have already called out in Q3, this is a planned absorption with one specific large NBFC. And other than this, we are not seeing any kind of challenge with other industries. In fact, all the consumer verticals for us are doing very well, both in terms of new headcount hiring and expansion to new geographies. So other industries, as of now, we are not seeing any challenge. BFSI is the only one that has impacted as far as general staffing is concerned. We'll come to IT later, but within general staffing for this quarter, the entire dip that we have seen is on account of the NBFC insourcing or absorption.
So is there a headcount addition guidance that you can share for next year?
So we would be comfortable to add at least 10,000 per quarter, so which is about 45,000 for the full year. That's the outlook that we have right now for next year. In case if BFSI and NBFC hiring gets picked up, it can be incremental to that number.
Got that. And how would this 45,000 crore of a headcount addition compare with what you did last year?
See, 2024, FY24, we did about 37,000 headcount. This year, because of the BFSI hit, it was down to 27,000. But going back to 45,000 looks achievable because we have already delivered similar numbers in FY24.
Sorry, you're saying FY25 headcount addition will be 45,000 versus 27,000 last year?
FY25 is 27,000.
Yeah, so you're expecting a big jump going forward.
Yes, that's correct. Because we are not foreseeing any further insourcings or absorptions in BFSI or any other vertical.
Sure.
And we are currently working on about 30,000 plus open positions. The demands are going up in other sectors and industries as well. So 40,000 volume addition for next year is something that we are targeting.
Got that. What about margins? Can you continue with the improving margin trend? And what would be the foremost reason which explains the improvement in margins?
Yeah. So one is, first of all, in all the businesses, we have already hit the bottom last year, especially in Q1. That's what we called out earlier as well. So we have been consistently improving on new client acquisition, more operational efficiency using technology enablement, and more focus towards cost optimization. That has definitely helped. In addition to that, we also have diversified our product portfolio, be it within our HR services or within specialized staffing, and also new geographies have helped us to expand the margins. And for next year as well, except for Q1, we will be able to demonstrate consistent margin expansion quarter on quarter. Q1, because of the annual appraisal impact, there'll be a dip in the margins. But barring that, we are confident of maintaining the margin expansion trajectory for next year as well.
Well, Ramani, you spoke about the BFSI segment, right? But what about others, like, say, the quick commerce segment or even the FMCG segment? What is the kind of growth that you have witnessed here? And what are the trends that you're currently witnessing on ground almost, 45 days into the first quarter?
Yes. So as I called out earlier, FMCG for us right now is giving the maximum open positions. In fact, out of the total open demands that we have right now, almost 35% are into consumer-related verticals, be it FMCG, e-commerce, quick commerce, retail. These sectors are giving us the maximum open positions. In addition to that, pharma, telecom, and a few other emerging sectors are also giving us good open positions. BFSI at this stage is still lull. We are expecting some recovery around the festive season, before the festive season picks in. But at this stage, we are not having any major hiring demand as far as BFSI is concerned.
Now, we can't not ask you about IT, and I don't want time to run out before we get to IT hiring. I believe GCC, that's Global Captive Center, now contribute 60% to specialized hiring. Is that correct?
That's correct, Rima. So 60% of our revenue in specialized staffing comes from GCC. This number used to be 40% about a year back, and we have been consistently adding a good amount of clients on GCC front. So that's the good news. But unfortunately, on the IT services, the domestic demand is actually very low, and in fact, it has been slightly coming down quarter on quarter. And the uncertainty continues. Even at this stage, we are not seeing any green shoots as far as IT services is concerned, while we are confident on the GCC side.
Percent compares with 45% a year back?
Yes, that's correct.
Got it.
All right, Ramani, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management of TeamLease, the street likes what Ramani was highlighting on the road ahead. Headcount addition seen at up to 45,000 compared to 27,000 in last year. The stock has now surged to the highest point of the day as the conversation went by. Take a short break. Up next, we put the spotlight on ITC. Numbers expected later in the day. Stay tuned.